Howdy, y'all. I'm Raymond Dahlman, and this is the weekly economic update for August 9th, 2021. I trust everyone had a fantastic weekend. It was pretty nice here in Colorado. A lot of smoke that's been blowing in from the West Coast. There's been this perfect high pressure system over Nevada, which has just brought all that smoke right into the Denver area. And there was... I saw that Denver had the worst air quality of any place. I assume it was mostly major metropolitan areas, but had the worst air quality of any major city in the world. So, which is unusual because the air is actually pretty good up here most of the time. So, but it's like living in a permanent fog right now. The visibility is pretty terrible. And when you live in a house without air conditioning and you have your windows open all the time, makes your eyes itch and burn, and pretty unpleasant. So I hope everyone else is having a wonderful Monday. So let's go ahead and jump into the economic update for this week. Starting out, the week on Wall Street, overcoming jitters about the Delta variant and the reintroduction of mask requirements. Stocks climbed higher on strong employment data and a fresh batch of strong corporate earnings. The Dow rose 0.78, the S&P was up 0.94, NASDAQ was up 1.11, and International picked up 1.61. So, hey, all four major indexes, were up for the week, which, if you remember last week, International was lagging. Push and pull, the cross currents of strong corporate profits and the rise of Delta variant infections led to a roller coaster week of price action as markets alternated between daily gains and losses. By Thursday, however, investors appeared to grow more optimistic that the economic reopening was not under serious threat when back-to-back employment reports suggested that the economic recovery remained on track. A favorable initial jobless claims report was enough to send the S&P 500 and NASDAQ to new all-time highs. Thanks to Friday's stronger than expected employment report, the S&P 500 managed to add it to its previous record close, while the Dow Jones average set its own record high. The more tech-centric NASDAQ, however, slipped off its highs. Next section, employment brightens. Last week reinforced the idea of an improving labor market after a disappointing ADP national employment report that showed a slowdown in private sector hiring with just 330,000 new jobs added. Subsequent employment data were much more encouraging. Thursday's report of a modest drop in initial jobless claims to 385,000 and a more substantial drop of 366,000 of continuing claims was followed by a solid employment report on Friday, which showed employers had added 943,000 new jobs in July, the biggest jump since August of 2020. The hiring increase shaved the employment rate down to 5.4%, down from June's 5.9%. So again, good news. I don't know if it's, if you would really want to call it, new jobs added. These are still jobs that are being added, or people are going back into those jobs. So it's not like it's not like new jobs in the economy. So let's slow down on that. But it is certainly positive news, and have a little more on that later. All right, as far as economic data this week, Monday is the job openings and labor turnover survey. Wednesday, we have the CPI. Thursday, jobless claims. Friday is consumer sentiment. We have a few companies reporting earnings this week. Air Products and Chemicals, Tyson Foods, that's today. Tomorrow we have Cisco and Coinbase. Wednesday, NEO and eBay. Thursday, we have Disney, Baidu, DoorDash, Airbnb. All right. The next thing I'm going to touch on is the monthly economic update that's going out this week to clients and to people on my mailing list. As far as how the U.S. markets performed during the month of July, let's see, the Dow Jones was up 1.25%, the S&P was up 2.27%, and the NASDAQ was up 1.16%. A wall of worry. Climbing a wall of worry, investors weathered a choppy month as markets digested a jump in consumer prices and the continued spread of the Delta variant. Inflation, which has been an increasing concern, hit levels not seen in decades. Consumer prices in June rose 5.4%, the biggest monthly gain since 2008. Meanwhile, producer prices, often a harbinger of future consumer prices, surged 7.3% from the year earlier. But both reports were primarily met with collective shrugs by investors. Not shocking. The market just keeps going up. Everyone continues to ignore the bad news. Reminds me a lot of 2008 and 9. It's just like people kept their heads in the sand while the market just continued to rise, even though there were warning signs that were all around us at that point. An inverted yield curve. We'd had years of lending to people that really shouldn't have, received mortgages. So it's never exactly the same, but after you've been doing this for a while, you start to see the same things over and over again. You have a boom, then you have a bust, and then you have a boom, and then you have a bust, and it just goes back and forth. And not that I recommend timing the market, but if you get good at looking at seeing when things are long in the tooth or when they may go the other direction, you might save yourself a little bit of losses along the way. All right, let's move down here. Corporate profits as July closed, 221 S&P 500 companies had reported earnings, with 91% of those companies beating Wall Street's estimates. Companies also reported strong sales, topping estimates by nearly 24%. Stocks took a breather in the final week, despite the Federal Reserve's renewed assurances that its near-zero interest rate policy would remain in place. Sector scorecard. All right. World markets. World markets picked up 1.6% in July. However, different parts of the globe showed mixed results. In Europe, France was under pressure, dropping 1.69%, while Germany was up 0.09%, and the UK was up 0.07%. Australia rose 1.09% to lead the Pacific Rim markets, but Hong Kong dropped 9.94% as Chinese regulators continued to push to rein in large companies for the reasons that include data security, corporate behavior, financial stability, and curtailing private sector power. All right. So as far as some indicators for the month, GDP grew at 6.5% for the second quarter. The growth rate, however, was below expectations of 8.4%. Employment, employers added 850,000 new jobs in June. Again, they're not new jobs, it's replacing jobs, marking the most significant increases since August of 2020. However, unemployment rate ticked higher to 5.9 due to a large, but has since gone down. We just talked about that. Retail sales rose 0.6% despite a 2% decline in auto sales. Sales were particularly strong at restaurants, bars, and clothing stores. Really? People can go out and eat and drink again? Shocking. Industrial production rose 0.4%, though manufacturing output declined due to reduced automobile production. Housing starts rose 6.3% in June, exceeding economists' expectations. Sales of existing homes rose 1.4% after 4 consecutive months of declines. Inventories ticked higher, while demand softened a bit. So, which isn't shocking. We're coming to the close. We're in the middle of the summer. People are probably wanting to be settled by the time school starts. Although I don't know why one would send their kids off to government schools anymore, because they're trash. Not all. I know there's some good ones, but as a collective whole, I mean, our kids are, it's malpractice what we're doing to them. All right. Consumer Price Index jumped by 5.4% in June. We already talked about that. So, all right. And also going out this week is the Retirement Insight. A couple of the topics here. The first one is, having 3 good friends can promote a happy retirement. In this section, they talk about, as of right now, the average person has 1.7 close friends compared to 3 back in the 1990s. And let's see, this guy, Wes Moss, a financial columnist for the Atlanta Journal-Constitution, contends that the happiest retirees have on average of 3.6 friends. So, and that's not shocking. I mean, if you retire, you leave your job, you had a lot of, work family, especially if you've worked somewhere for a long time, they're part of your extended family. So if you retire and you don't see them that often, you might become distant. And but staying active and having a good circle of friends is very, very important. Something that I witnessed with my own grandparents. The power of volunteering is the next subject, and it talks about for retirees, finding something that they want to do. It says here, this year, AgeWave learned that the average retiree spends, or let me start. Let's see, that said that in a survey in June, retirees who volunteer spend fewer hours helping their communities or favorites causes than they would like. Most would, basically what's saying is most retirees would like to volunteer more, but it's how do you find those activities to go and volunteer? So my suggestion is, join an Elks Lodge. That my grandparents were members of the Elks Lodge in Dunning-Kema for years. My grandfather was on the city council in that city. So these are the things that keep you busy. Just because you're retired, sitting at home and watching Jeopardy is, that's not your full day. Whether or not it's gardening or getting out and hiking and exercising, going and doing some volunteer work. Maybe take what you did as a profession and do it pro bono for people, or be a mentor and teach people how to do what if you're a plumber or a welder, maybe mentor people. So anyways, staying busy is probably the most important thing when it comes to retirement. As far as on the bright side, with inflation over 5%, they're estimating that the cost of living adjustment for Social Security may be as high as 6.1%. It's kind of a wait and see. So, all right, a couple of white papers I'm sending out this week. The first one is the cost of a gold medal. Talks about back in the inaugural 1896 Olympics, winners received silver medals and second place got a bronze. And then in 1904 at St. Louis was the first location where they awarded a solid gold medal. That only lasted until 1912. So today, modern medals are made with 550 grams of pure silver and coated with 6 grams of pure gold. This year's medals are worth about $810 on the open market. So also, some countries do provide a bonus. For example, Singapore provides the most significant payout at $1 million US per gold medal. The United States awards athletes $37,500 per gold medal. So, and you'll probably have to pay taxes on that. So, typically, that's the way the government works. Next one is direct investing. An old way to manage a portfolio is getting some new attention. You probably hear the term indexes or the stock indexes, and what they really are is just a basket of companies. So like the Dow Jones is made up of 30 stocks that are all weighted differently, but it's those 30 stocks. So when you talk about direct investing, you can actually look at the index, scan the index for specific securities that you'd like to purchase, and you can buy them directly. In layman's terms, that's essentially what this white paper talks about. All right, and then the last white paper, how U.S. savings bonds work, starts out, did you buy a U.S. savings bond decades ago, or did your parents or grandparents purchase them for you? If they're collecting dust in a drawer, you may want to take a look at them and see if any of your bonds have matured. If your bonds have matured, that means that they are no longer earning interest. It also means you might want to consider cashing them in. I like the little disclaimer right here in the middle here. This article is for informational purposes only. It is not a replacement for real-life advice. So make sure that you consult your tax professional when you're considering any move with a U.S. savings bond. Thank you. If you have savings bonds that are Series EE or Series I savings bonds, the interest is tax exempt if you're using them for educational expenses. Also, you do have to declare the interest either at maturity on your 1040, or you can report it each year as the interest accumulates. So 2 different ways to go about doing that. All right. And I had two bits of information I wanted to share from First Trust. Their first one is their July employment report. It talks about, non-farm payrolls increased by 940,000 in July, beating the consensus expected by 870,000. Certainly good news. Unemployment dropped from 5.4 to 5.4 from 5.9. Also, average hourly earnings, cash earnings, rose 0.4% in July and are up 4% versus a year ago. Aggregated hours worked rose 0.6% in July and are up 6.3% from a year ago. So the implications, the job market is improving significantly. That again is certainly good news. A lot of these are people who were temporarily laid off, were furloughed for a period of time while different areas were shut down. Let's see. Was there anything else on here? I'll attach this to the video. So if you want to go ahead and read it yourself. But all good news. All right. And then the last one is projecting governments. This is from Brian Westbury, who's the chief economist there at First Trust. And he writes, starting out, in an ideal world, analysts and investors wouldn't have to spend much time, perhaps none at all, trying to manage around changes in government policy. In that world, government, be it in terms of spending, taxes, and regulation, would be small and consistent enough to not require much thought. Unfortunately, we don't live in that world. Government is way too big. As a result, we spend more time than we should trying to figure out what the government is going to do next. 3 major issues related to government policy are now looming large among investors' concerns. First, when is the Federal Reserve going to start tapering quantitative easing? This is probably one of the easiest answer among the 3, with Fed policymakers recently going on record suggesting that the Fed will announce a tapering of QE by the end of the year, an actual tapering starting in January of 2022. Given our forecast of continued solid economic performance and inflation exceeding the Fed's projections, we think the Fed will conclude tapering by the end of 2022, perhaps even by September of 2022. In turn, that means the Fed will start considering rate hikes in 2023. So first, is the Fed going to do anything about, all the assets they're buying and keeping interest rates at zero? We don't know. We'll see. Second question is about fiscal policy, which might still be under debate as you read this piece. The U.S. Senate is voting on a so-called infrastructure bill. They've been voting on several of these things, and they're all just full of pork and trash. Not a good thing. So we'll see, whether or not it's going to be a trillion or 3 trillion. Who knows? I mean, I know that the left would like to do everything at the federal level and rob us blind so that they can do all their stupid projects. But who knows? All right. And then the last question is whether we're going to have another COVID shutdown like we had in 2020. That seems doubtful. We think the shutdown would be perceived by the country as a step backwards against the virus at a time when Democrats are in control of the White House, the House, and the Senate, and the party trying to pass key legislation. If a shutdown results in a Republican victory in the Virginia's governor's race in November 2021, that would make it even harder for moderate congressional Democrats to vote with Biden, the Biden administration, on taxes and spending. So that would be good news. Personally, I say we just get rid of the entire federal government and, level Washington to the ground and just do things at the state level. It'd be so much easier and so much less stress. All of this is, the left and the right fighting over who's in charge to steal my money and, impose stupid laws. But no one asked me for my opinion. So anyways, all right. Well, that's everything I had for today. I apologize for not getting a wrap-up video last week. I've just been busy getting the week since getting back into town. So it's my fault. I'll do a better job of doing that this week. So if anyone needs anything from me, feel free to reach out, email, call, smoke signals, carrier pigeons. Doesn't matter to me. Also, please like and share with friends and family. I would appreciate it. And hope you have a great week. Bye-bye.